You walk into a bank. You have $800 in your checking account. You wait in line for 12 minutes. A teller sees you for 3. You leave with a pamphlet about a savings account that pays 0.01%. Now watch this. You walk into the same bank, same door, same carpet, but this time you have $250,000 with them. Someone greets you by name, offers you coffee, walks you to a private office. And the rates they quote you in that office? They're not listed on any website. Same bank, same you, different rules. I'm Arthur. I worked an ordinary job for 30 years, retired at 52, and now I spend my mornings explaining what nobody explained to me. Quick honest note before we start. This channel uses AI tools for the voice and visuals you're seeing. And nothing here is financial advice, just principles from a man who's had time to test them. All right, let's get into it. Before we go level by level, I want you to remember one number, 212. Don't write it down, just keep it somewhere in the back of your head. Because at the end of this video, that number is going to explain everything about how banks really see you. 212. Hold on to it. When I was 34, I had $412 in my checking account and 2 loans I was pretending not to think about. One Friday, I bought groceries, gas, and a birthday present for my son. 3 purchases. What I didn't know was that my account had already dipped below 0 on the first one. The bank charged me $35, 3 times, $105 in fees, for spending $58 I didn't have. Here's the part that still gets me. The bank had a choice that day. Their system could have declined my card. Instead, it approved every purchase and charged me for each one. They call it courtesy overdraft protection. I've never felt so expensively respected. I sat in the parking lot of that bank branch after arguing with the manager and losing, and I remember thinking, this system is not broken. It's working exactly as designed. I just didn't know whose side of the design I was on. That day, I started paying attention. And what I found is what I'm about to show you. 5 levels. 5 completely different banks hiding inside the same building. Let's start where I was. Somewhere between $0 and $1,000 to your name. At this level, I have to tell you something uncomfortable. You are not the bank's customer. You are the bank's product line. Think about what the bank earns from this level. Overdraft fees, $30 to $35 each, and banks collected billions of dollars in them last year alone. Monthly maintenance fees, $10 to $15, charged precisely to the people who can least absorb them. Minimum balance penalties. Out-of-network ATM fees, $3, $4, $5 to access your own money. None of these exist at the upper levels. Not one. They quietly disappear as your balance grows, which tells you exactly what they are. They're not the cost of banking. They're the cost of being at this level. Here's the math nobody does out loud. If you pay 1 overdraft fee and 1 maintenance fee a month, that's roughly $540 a year. If your balance averages $500, you are paying your bank over 100% of your money every year for the privilege of holding it. Your move at this level is one single thing: make fees impossible. Switch to an account with no maintenance fee and no overdraft. They exist. Many online banks and credit unions offer them, and it takes one afternoon. You cannot outsave a fee machine. You have to step out of it. That's the whole game at level 1. Stop the bleeding. Nothing else matters yet. Now you've got some breathing room. $1,000 to $10,000. The fees stop hunting you, and the bank changes its strategy completely. At this level, the bank stops charging you and starts selling you. Watch your mailbox. Watch your banking app. Suddenly it's credit card offers, pre-approved, platinum, rewards. Why? Because this level, people with a little cushion, steady income, and no investment habit yet, is the single most profitable customer group for credit card divisions in the country. You can carry a balance, and they know most people at this level eventually will. But there's a quieter trick at level 2, and it costs you more than any fee. It's the interest rate on your savings. The big traditional banks pay around 0.01% on a standard savings account. As of the time I'm recording this, high-yield savings accounts pay around 4%. Rates change, so check the current numbers. But the gap between those two has existed for decades, and it is never small. Let me make that concrete. $10,000 sitting in a standard big bank savings account earns you about $1 a year. $1? The same $10,000 in a high-yield account earns around $400. The bank is betting that you won't move it, that the hassle, the unfamiliarity, the "I'll do it later" will win. Banks earn billions a year on that bet. They lend your money out at 7, 8% and pay you a rounding error. Your move at level 2. Open a high-yield savings account and move everything except 1 month of expenses. It takes 20 minutes. It is the highest hourly wage you will ever earn. Level 3, 10 to 50,000. And here's where something strange happens. Nothing. No, really, pause for a second. Which level are you on right now as you watch this? Because if it's this one, you've probably felt this. You did everything right, you saved real money, and the bank went quiet. You're past the fee traps. You're past the aggressive card offers. But you're below the threshold where the bank assigns you a human being. You have become the invisible customer. Profitable, low maintenance, ignored. And this is the level where the most expensive mistake in retail banking happens. Not because the bank does something to you, but because nobody tells you what's now available. Because at this level, things become negotiable. Certificate of deposit rates, negotiable if you ask. Loan rates, negotiable if you ask. That personal banker the website mentions, you can actually request one. They will never, ever call you first. There's also a warning that belongs at this level. Around here, someone at the bank may invite you to talk about investment options they happen to sell. Be careful in that room, friend. Bank-sold investment products often carry some of the highest fees in the industry. The person across the desk may be a salesperson with a title. Ask one question. How are you paid? Watch what happens to the temperature in the room. Your move at level 3. Ask. Literally, just ask. What can you offer me at this balance? The difference between the customers who ask and the ones who don't, compounded over a decade, buys a car, 50 to 250,000. And now, the bank starts to move. This is the level where, at most major banks, you cross into their preferred or premier tiers. And I want you to notice the exact moment the relationship flips. This is the first level where the bank calls you. The fees you paid at level 1? Gone. Waived automatically. Wire transfers, cashier's checks, safe deposit, waived. A relationship manager gets assigned, a real person with a direct phone number. And here's what almost nobody at this level knows. Mortgage rates get quietly better. Not the advertised rate, the relationship pricing. Bring enough assets to the bank, and suddenly there's a discount that never appeared on the website. A quarter point, sometimes more. On a $300,000 mortgage, 0.25% is roughly $15,000 over the life of the loan. $15,000 for asking one question in the right room. But most people at this level never ask. They're still banking with level 1 habits, same account they opened at 22, never negotiated a rate in their life. The bank counts on that. I'd guess most premier eligible customers never claim half of what they're entitled to, because entitlement at a bank is opt-in. Your move at level 4. Call your bank and say 5 words. What tier am I in? Then ask what the next tier requires. You are no longer asking permission. You're comparing offers. At this level, other banks want to steal you. Let them try. Make yours match. $250,000 to $1 million. Private banking territory at most major institutions. The private office from the beginning of this video? This is it. And what changes here isn't comfort. It's the menu. At this level, you discover the bank has products it never showed you. Lending against your investments instead of selling them. Custom term deposits, estate and trust services, access to a banker who answers on the second ring on a Saturday. But here's the truth I want you to take from level 5, because most of you watching aren't here yet, and this is the reason to care anyway. Below $250,000, the bank's business model is to profit from you. Above it, the business model is to keep you. Every fee waived, every rate sharpened, every coffee offered, it's not kindness, it's retention. You've become expensive to lose. And once you see that, you can never unsee the whole ladder. The bank was never one institution with one set of rules. It's 5 institutions stacked in a trench coat, and your balance decides which one you're talking to. Now let me show you what this ignorance actually costs, not as an insult, as arithmetic. Take 2 people, both 35, both with $15,000 saved and growing. One knows what you now know. One doesn't. The one who doesn't pays, say, $200 a year in avoidable fees. Keep savings at 0.01% instead of 4%. On an average $20,000 balance, that's about $800 a year left on the table. Takes the advertised mortgage rate instead of the relationship rate, call it $500 a year. Buys one high-fee investment product in a bank office at 40, often 1% a year, quietly, forever. Add it up conservatively, and the gap runs around $1,500 a year. Invested instead, growing at historical market averages, and remember, past performance does not guarantee future results. That gap compounds to somewhere near $70,000 by retirement. $70,000, not for earning more, not for working harder, for knowing which door to walk through and which questions to ask. Nobody teaches this. Not school, not your employer, and certainly not the bank. The system doesn't need to hide it from you. It just needs you to never ask. Which brings me back to the number I asked you to remember, 212. When I was 34, sitting in that parking lot with $105 in fresh overdraft fees, the bank saw me as a revenue source, and they were right to. That's what my balance said I was. 18 years later, my phone rang. It was the bank, a woman with a soft voice and a title I'd never heard of, inviting me in to discuss my relationship options. The day she called, my accounts there had just crossed $212,000. Same man, same bank. I hadn't gotten smarter that week. I hadn't become more charming. Only one thing had changed, the number. The bank never treated me, it treated my leverage. And leverage, friend, is just a number that you build. One boring, unglamorous decision at a time. So don't get angry at the ladder. Climb it. Move the savings this week. Ask the questions. Take the waivers. Every level has one move, and every move is available to you right now at whatever level you're on. Money doesn't shout. It whispers. And now you know what the bank hears. If this changed how you look at your own bank, the comments are open. Tell me which level you're on. No judgment here. I've been on all 5. Take care of your money. It's quietly taking care of you.